Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Happy Monday. New month, August 1st. Hopefully July worked out well for you. Hopefully you're in the black. That was the strongest month we've had since one of the months back in 2020. So here we go. Let's see what happens. So very important couple weeks coming up for the market. If we do see continued follow through beyond, talking S&P, beyond 4,200, I think 4,200 is probably in the cards as far as an upside target. Beyond that, there's just going to be continued rhetoric and calling for the new bull market to resume. Technically, in the charts, things are looking a lot better. The S&P, for example, you've got the 25-day moving average. Looks like it wants to come up through that 50-day. The 200-day does lurk higher. It's going to be a bit above 4,300 on that S&P. I mean, it's entirely possible we go all the way up to there, hit our head on that 200-day and roll back over. I mean, that's possible on just a giant bear market rally. Who knows? We will see, but those are things to look out for. So the like big data-wise, macro data-wise, inflation data-wise, we got the next big report is Wednesday the 10th, so a week and a half away for CPI. That'll be a big number the market looks at and listens to, even though it is a lagging indicator. In terms of earnings, actually earnings season's been pretty good of the S&P 500 companies that have reported. In general, decent growth, profitability, margins hanging in there. Some could argue the market's still a bit expensive given the current growth rate. But in terms of specific stocks, you take a look at Amazon. Amazon really stands out to me as one of the big winners in terms of the mega caps that have reported so far. I mean, showing that 20% penetration of online retail sales has probably further to go in terms of share gain versus the Walmarts and Targets out there, right? I mean, those guys couldn't get out of their own way with inventory problems, ordering the wrong stuff, what have you. And here Amazon puts up this great number. No signs of a pullback for the consumer for them. Everybody expecting something, and didn't happen. AWS clicking on all cylinders. They've got new product initiatives coming around the corner. So I like it. If you're uninvolved, it probably makes sense on a pullback to start accumulating, because they'll come for that stock. By they, I mean all the fund managers and hedge funds. As this thing starts to run, it looks like the strongest one of the mega caps out there. So that's one to definitely have. And we've been talking a lot about base metals recently. We talked about copper quite a bit. And that's, you look at Freeport-McMoRan had over a 5% up day on Friday. I mean, no one's really there, so it's a lot of fun. The commodities up again, small this morning. I would look probably for a little profit taking because you do have weakness out there in the commodity tape. Crude's down 3%, nat gas down like 3%. That's definitely worth keeping an eye on, both those, especially crude. That's a big down move for crude. But still, nonetheless, I do like those base metals. Part of that thesis is those other manufacturing facilities outside the United States, whether they be in Europe or China, looks like they have their problems. Europe in terms of the cost of the energy that they use. China in terms of they can't keep anybody open, forever because they just lock towns down left and right because of COVID still. And I don't see that going away with an extremely contagious variant out there on the loose these days. So that's going to be tough for them. But that's our game. So the base metals, steel, aluminum, copper, particularly copper, continue to look interesting here. And they also fit the playbook. If you are in the camp that, okay, the worst is behind us, you got to get long cyclicals. Those guys, every one of those fits into that category. So, and then speaking of cyclicals, keeping an extremely close eye on semiconductors. It's one of those things where they have garnered a bunch of short interest recently from hedge funds. I think a lot of the up move has been short covering recently, but Onsemi reported this morning, great quarter, record. I think a lot of records on a lot of metrics, and stock's down 5.8, recovering off the lows, but it is down roughly 6% this morning. I'm not sure if there was inventory commentary on the conference call or what. I got to check that out, but that's an important one, and it's definitely pulling back here a little bit. Now, mind you, it's had a huge run, so that simply could be part of that. But we will see. We've got AMD coming up this week. That'll be huge. That you'll probably see continued share gains versus at the expense of sad Intel. Yeah, we'll see. I do want to get along this group. Love getting along this group when the time is right. These guys fly, and it's a lot of fun. But you got to make sure that this is it. So we've got to do a little more work on the Onsemi and the rest of them. Have an awesome day, and good luck this week.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the Accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the Accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.